I cannot anticipate us taking the full hour. There is a quiz. It's in the chat. Ellen, maybe you could copy it again and keep copying it for people that come in new won't see it if it's posted prior to them coming in. So post it again and then send your result. I have my name and my email. So if you can kind of just keep that rolling. What we're going to do is we also have next week, we have a second presentation. And then once the two of them are done and you've completed the quizzes, and it's not hard, we're going to help you get through it. We're not putting the pressure on you to remember all of this stuff, but we want to make sure that you are participating so we can give you a certificate, basically saying that you're qualified to help your clients get some savings here. So let's get started. All right. If anybody has any questions, I don't think I can see them, but Ellen, you'll be watching. Maybe if you can stop me at any time if somebody is asking questions. But we want to start with market proof your income. Okay, how elite loan officers are thriving in 2026. Discover how tax strategies can create a rate proof revenue stream. I need to move some things around so I could see my pictures here. All right. So as of April 2026, the average 30-year mortgage rate is around 6.3 to 6.5, according to Freddie Mac. That's far above the 2 to 3% loans that people were able to get back in 20 and 21, which means typically refinance volume is really low because of that. And a lot of borrowers are not moving homes, right? They're not upgrading or downsizing or really doing much because they don't want to lose that interest rate. So the refinance business is limited. The purchase volume is low. That's creating stress for loan officers. Okay. I mean, everybody, real estate agents, loan officers, the whole market. Okay. So this is why we're bringing this to you. But what many loan officers are quietly facing right now, they're watching their hard-earned savings shrink just to keep up with everyday expenses. A lot of them, I'm not saying you, but a lot of them are wrestling with difficult decisions like whether they continue sending their children to private school, making painful adjustments, downsizing their homes, or possibly cutting back on things that they relied on. And they're questioning their future as a loan officer because things are uncertain at this time. You're working longer hours and putting in much more effort to make less money. So this isn't about income, it's about stability, identity, and the pressure to keep going despite the weight of it all. So your existing clients don't just need loans, they need sophisticated tax solutions. High net worth clients are actively looking for ways to mitigate taxes and preserve their wealth. They're searching for guidance that they can trust. And you are uniquely positioned to provide it. You are their trusted advisor. You already have that relationship. You have the credibility and you have the access to information to see if this would work for them. So right now, top performing loan officers are adding six-figure income streams by simply incorporating strategic tax referrals into your business model. So this isn't about working more hours. It's not about expanding your value. And most importantly, it's about creating income that doesn't rise and fall with the interest rates. It's stable, strategic, and scalable. That's the opportunity. So I'm Ruth Benjamin. I spent over 35 years helping people with tax mitigation strategies and preserving clients' wealth through strategic tax planning. I specialize in guiding clients through various IRS approved methods to reduce, defer, or eliminate income taxes and capital gains taxes on the sale of highly appreciated assets. In my career, I was the president of two different title company owned accommodator companies. I currently advise National 1031 Exchange Center, but I'm the person that likes to get creative with the boundaries of the IRS code and help clients with difficult situations. So we arrive at a solution that they can take back to their CPA to see if it could work for them. So over the past 35 years, I have helped many clients protect their investments, lower their tax bills, and build lasting wealth. So, okay, so you guys, just so you know, this is one of the questions on that test. So if you've got the test in front of you, this is one of the questions. Let me look and tell you question 11. Okay. Question 11. Here's your answers. So, strategic approaches to tax reduction. There are multiple effective strategies available to legally and ethically reduce tax liability. These include strategic timing of income, okay? Managing when the income is recognized to optimize tax outcomes. Deferral strategies, postponing taxable events to future periods when rates or circumstances may be favorable. So I'm going to stop real quick here. How do you do that? Well, a lot of our clients that are business owners, they can create management companies using C Corps. Well, you can start a C Corp using a staggered tax year. So I'm not going to get real deep into that, but I want to let how are you going to do that? That's what most people question. How does that work? So there's tax loss harvesting by offsetting gains by strategically realizing losses. There's income shifting within the family. So allocating income in a manner consistent with the tax laws. Take advantage if you can hire children in your business, getting some income into their low tax brackets. Utilizing business entities, structuring operations through entities that provide tax efficiency and liability protection. Okay, a lot of people that own businesses that have S corps, they have husband and wife uh, getting a salary out of it and paying all that employment tax. There's ways to change that around that can help benefit them when it comes to taxes. Creating tax advantage income streams, right? Leveraging IRS sanctioned provisions. Understanding green lights in the tax code, identifying clearly permitted opportunities that encourage specific economic behaviors. IRS approved investment vehicles, right? We all pretty much know about those IRAs and Roth IRAs and all those leverage things that you can do. Tax credit investments, participating in programs that generate dollar for dollar tax credits, and strategic asset acquisition, acquiring assets that provide depreciation, tax credits, or other tax advantages. So I just want to let you guys know that today is not the day to remember all of this. Today is the day that you could say, you know what? She said something about this and I can help my clients. So let me get on a call with her and see if we can help clients. So how tax planning works. We often use the analogy of going to the doctor. We need to diagnose the pain, which is the large tax bill. We ask clients for 3 years of past personal tax returns and 2 years of business returns if they have a business. So we can examine those and identify opportunities to help reduce, defer, or eliminate the tax bill. We also need to understand the client's financial goals because if you have a business owner that needs to acquire loans for their business or they need to show income, we don't want to take their tax bill down to zero. So we have to understand the client's goals and lower their tax bill as much as possible. So then we have to prescribe the solution. We will develop a tailored tax strategy for each individual client. We create the implementation roadmap to show them how they can get those results. And in some cases, we do coordinate with other tax professionals that provide strategies. So then we fill the prescription, we get the strategies executed that meet the client's goals, we monitor results and compliance, We want to make sure that CPAs are reporting the information correctly. And in most cases, when we provide some guaranteed savings, we like to file the tax returns because we want to make sure those savings happen. Just this year, clients reached out to us and says, "Oh, my tax person says I owe $160,000. Do I pay that and then get the money back?" No. Did you give the tax person your documents to show you did a strategy? So we got to kind of handhold our clients, but that's what we're here for. In some cases, we use multiple strategies. So we stack strategies to meet the client's goals. So many clients are overpaying their taxes, often without realizing it. The truth is, taxes aren't just about numbers and calculations. They're about asking the right questions. So the difference between overpaying and paying the correct amount often comes down to one simple moment when someone asks, "Did you know this counts?" And when the right questions are asked, real opportunities are uncovered. So traditionally, CPAs are trained to focus on compliance. They're making sure the income is properly recorded and reported and filed according to regulations. Their main role is to accurately document what a client has earned and ensure everything meets the tax reporting requirements. However, strategic planning is a different discipline. It goes beyond reporting and what already happened and looks forward to structure proactively for clients. Now, I've had clients that I talk to their CPA on the phone about, helping them with something, and their CPA says, "You know what? I'm tired. I don't want to learn anything new. Just use her CPAs." Okay. That can come up also. But typically, high net worth clients often pay $35,000 to $500,000 a year in taxes, and only 2% of taxpayers maximize the available strategies. So many people say, "Hey, how come Trump doesn't pay?" Right? That's a standard question. Why are the big guys not paying the taxes? They have their team that knows these strategies. Well, these strategies are available to you too, but you have to be a high, tax paying person to be able to benefit from that. So here's question number 12, guys, on this test. The question that opens the doors. When was the last time your tax professional came to you with an idea to save you money? That's question number 12. So when I pick them up, I will let you know where they're at. But at the end of this, we'll go through the questions so you can get through that quiz. All right. So the investment tax credit, okay, this is the quiz, pay attention. The investment tax credit is the standard 30% that the federal government provides. Coupled with the batteries being placed in energy communities gives you another 10%. So energy communities are areas that are off grid or run down portion of a city that would be very hard to get electricity to that area. Here's the next question. All units in the program will hit the 40% criteria. So the 40% is question number um, 4. Okay, question number 4, 40%. Okay, last year these units were located in Mount Vernon, Missouri. It's near Springfield, Missouri. So there was an old VA hospital that was shut down, and it was now being converted to a training hospital. Well, it's already been done, but last year it was being converted to a training hospital. So there's a developer that this main solar company that provides this strategy for us. The solar company was working with the developer. That developer purchased 40 acres of land and wanted to put 150 to 200 cabins around the hospital so doctors and nurses could come and train. So, why are the tax credits given? The government is incentivizing battery energy adoption. When we don't use solar so much anymore because they took out the solar panels out of the big beautiful bill. They're more interested in the storage of the energy. So this is the battery storage. So they are redirecting tax dollars into battery energy investments, creating green energy infrastructure, reducing demand on traditional power grid, and stimulating economic development in the energy sector. So, why is this important to you and your clients? Using the proper structure, you can purchase enough tax credits to eliminate 2026 tax bill and achieve refunds on taxes paid over the last 3 years that will be applied to purchasing batteries to start your new battery energy business. This maximizes tax benefits and builds your wealth. So, what would you or your clients do with that extra cash? The investment tax credit is the standard tax credit, 30%. That's one of the questions. 30% standard tax credit. Coupled with the batteries being placed in the energy communities, you receive another 10%. So again, energy communities are the areas that are off grid, they're run down, there's no electricity there. So all units hit 40%. Okay, that's a question, 40%. These tax credits provide a dollar for dollar reduction in tax liability, making them extremely valuable for high income clients.
Ruth, I'm not sure how you want to handle questions during the program or at the end, but we did have a question come up. What is a battery energy investment?
Yeah, let's do it at the end because I'm going to go through the whole thing and then I'll answer that question because it's going to come up. Okay, thank you for that question. It will be answered in this presentation, and if it's still not clear, I will address it. Okay, so it is the main solar company putting these packages together that you purchase using your past paid tax dollars. So the tax credits go back 3 years. You own a solar leasing business. Now, you start with an LLC that is created for you. That LLC will hold the batteries and you will get all of the benefits because you are the one who owns the batteries. It's not a partnership or a syndication, and it doesn't have SEC regulations. So you purchase the solar equipment through your LLC with the 3 years past tax dollars that you already paid. So the IRS is pushing this program really hard. This is not a loophole or a gray area. It's an IRS program due to the Inflation Reduction Act. They're expecting 800 billion of tax credit sales over the next 8 years. And then after 8 years, it will sunset and go away. So we've got 8 years of playing with this program. Instead of having to go back and amend your last three tax returns, you will file a Form 1045. It's a business loss form. So you can also, that's how you'll get your money back. And I'm going to walk you through the whole thing. But you can also forward any used tax credits for 20 years. So here's an example for 1 unit. You own 1 unit. Someone else is going to pay you for the electricity. Now, why are they going to do that? The cost of a unit is 208,000 total. So that person or the developer doesn't want to pay 208,000 for each one of its units, right? So he's going to rent the battery energy for his tenants and pay $272 per month for that electricity. So this project is totally off grid. They have to rely on solar. There's no other options. Each cabins may need 1 to 2 units, depending on the size of it. So that developer doesn't want to spend $400,000 on battery energy and plus all the operating material, but he needs electricity for the doctors and nurses that will be staying in the cabins. So for him, it makes much more sense to pay the monthly rent. And on our end, we're going to have the long-term benefit. The these batteries are being placed on these cabins under a 50-year term. So, with that being said, it's your business. The main solar company would like to own your batteries after 5 years. You don't have to give it to them or sell it to them. You can hold it for the full 50 years, but for the first 5 years, they're going to maintain it, make sure everything's good if there's any problems. If you decide to hold it anytime after that 5 years, then you're going to have to maintain it. So most of our customers are making sure that the main solar company ends up with that ownership so they don't have to worry about it. Now, in order to avoid the depreciation recapture, you have to hold those batteries for 5 years. So during that 5 years, you should utilize all the benefits of the tax credits. That will mainly be used in year one. Sometimes we see a little bit of rollover into year two, but really you're going to use all of the benefits in year one. So the main solar company gives you a loan at 0% interest. And that leverage also gets tax credits and depreciation. So, how we can get the tax credits and depreciation on that loan amount? Well, it needs to be a recourse loan. So the main solar company is going to loan you money at 0% interest, but the IRS wants you to put a personal guarantee on it. That personal guarantee has to be on that loan for 1 year. After that, you drop off and the main company will go on. The business that you own will be a sole proprietor LLC, single member LLC, and it only holds two things. It holds the batteries and you open a bank account for your tenants to make the energy payments. So at the end of the 5 years, the goal for the main solar company is to get those assets back from you and you can walk away after 5 years with no depreciation recapture tax. So that's the model of this business. So again, the main solar company will give you a loan at 0% interest. It needs to be the recourse loan for at least a year. Then you drop off and they're on, and you have to hold for 5 years to avoid the depreciation recapture tax. So every $1 put into this structure, you can expect $1.66 in tax credits. So think about this. You're getting these tax credits and you haven't come out of your pocket with any money. Okay. They're going to pass tax dollars. What other business can you start where the federal government gives you back money to start the business, right? You haven't come out with any money out of your pocket and you're getting the tax credits. So the current tax year needs to be eliminated first. So 2026, we would buy enough batteries to get rid of that tax bill. Then with the Form 1045, they go back and pull back the last 3 years of paid taxes, and you're going to end up giving that money to the main solar company because they're fronting the money to buy your batteries to get them in place before December 30th of this current year, December 31st. Okay. So we will need to know how much your clients have paid over the last 3 years. Now, I'm assuming you guys have tax returns in your files. I'm not sure how far back you go, but we need to know the past 3 years. How much did they pay and how much do they estimate paying this year? How much income do they estimate? We can figure out what they would pay. Then we determine how many units are needed. So typically, if a client is paying $35,000 to $50,000 a year, they could be a good client for this opportunity. So again, you file the Form 1045 with your current year's taxes to start the process of receiving those prior taxes. Now, we will help with the depreciation limit guidelines. We're going to walk the clients through everything and their CPAs to make sure that everybody understands how this works. And remember, it's a 5-year commitment of owning a solar business. You are in business. This even works for W-2 people. Okay, they can own a business. So if the doctors and nurses default on the payment to you on for that energy, there's no payment due on the loan to the main solar company. And the main solar company literally has a button where they can shut off the electricity if they're not making the payments. And in some cases, if they continue not to make payments, they literally take the batteries and go place them somewhere else where you will get the income. So it's not going to last very long that you wouldn't get the payments for that. So remember, these credits cannot be used to offset payroll taxes. Okay, so if you have people that have payroll issues, that's not going to help here. So any business or person that has paid $210,000 or more over the past 3 years are prime candidates for this solar investment. So this is the tricky part of the program. There's active participation required. Okay, 100 hours of active participation. This is an active business. So material participation can be achieved if both husband and wife attend a 2.5 day summit in Missouri. And once they do that, they hit 96 hours. The conversations with us and the tax team will eat up the remaining 4 hours. Their flight there even counts. Okay. So we have to ensure they do the material participation. If they don't, the IRS could take away those tax credits. So it's really important. If you have a single person, then, there's like YouTube videos and different things they could do in addition to the 2.5 day summit. So, how loan officers benefit? A new income stream, right? Earn substantial referral fees for each qualified client. The referral fee is approximately $2,000. Okay. Your client relationship enhancement, become your client's most valuable financial advisor. And the client acquisition tool, attract high net worth clients with sophisticated planning. Stand apart from your competitors stuck in traditional lending. So let's talk about starting client conversations. You start with one simple question. It's the answer to that one I already told you. I think, let me see, I think it was 12. Yeah, 12. When was the last time your tax professional came to you with an idea to save you money? After that, the follow-up. Would you be interested in learning about a strategy that could potentially reduce, defer, or eliminate your tax bill? Then, just to make sure this might be a good fit, can I ask, what do you typically pay in federal income taxes each year? Now, that's if you don't have the taxes in the file, right? If you already have the file, go back and look at those taxes. I'm going to show you where to look. So, on the Form 1040, the individual tax return, line 15 shows their taxable income. But more important, look at and this is your questions, guys. Let me see where they're at so you can see. 14. Question number 14 on the 1040. Okay. So line 22, right here, line 22 is for business owners. That's the amount of taxes they paid. If you're dealing with a high W-2 income earner, you're looking at line 24. So when you're working with our team, they're going to ask you, what's their line 24? What's their line 22? You got to know it. So on our end, we track. So we want to know each year what the client is making. If that equals 210,000 or more, in some cases we can go lower. So if they're around 170 or so, don't say, oh, you don't qualify. Let's see if we can, help them out. Okay. So look at the last 3 years of tax returns. The combined should be 210,000 over the last 3 years combined. And like I said, sometimes it could be a little bit lower. So I want to go through, we're ready for questions and answers. So I want to go through the test. If you guys didn't get some of them, it's okay to ask the answers. We want to make sure that everybody has got the test in their hands, and it can go that you can fill it out and get it back to us. We would love to get that certificate to you. After next week's class, we're going to talk about trust, asset protection, how to make yourself uh, so solid that if somebody sues you and they win a lawsuit, they cannot touch you, they cannot get to your assets. And that's what I'm going to talk about next week on the webinar. So, Alan, go ahead and ask me any questions that have come in.
So the latest one was, am I understanding this correctly? Instead of sending my taxes to the government, I'm instead buying batteries.
That is correct. So if you're a person that's paying quarterly taxes and you decide to use this battery energy, you can stop sending money to the IRS this year. If you're a W-2 high income earner, you could go to your HR department and say, stop taking federal tax. So this is federal, okay? The state of California doesn't cooperate, but you can eliminate your federal taxes.
We also have tax credits carry forward 20 years.
Tax credits carry forward 20 years. So if you won the lotto one year and you got all this happening, and then you're back to your normal income, you can carry the credits that you haven't used for 20 years.
And then I'm guessing we covered the battery energy investment question. What is battery energy investment? A
Yep.
battery. Okay.
You're buying batteries. So you're in the battery energy business. You're buying batteries that somebody else is using and paying you for that energy. So it's not something that you could put on your home or your rental properties. It has to be used for business use. So, Alan, did you put in the chat my information for the test and where to send it in? So I will be going through them and making sure everybody has completed them. And if you need to reach me, I'm going to give you Don Crozier. His information is right here on the spreadsheet. He has a QR code if you need to reach him. He is the person that facilitated getting me to start working with you guys, and he can help with any people that want to go through the battery energy program.
So there is no marketing involved for the battery buyer. These batteries are already in operation, question mark.
Yes, the main solar company already has the sites. So think about this. You own a solar business and you get all this business, right? You're getting people that want these batteries on their site. So you as a business owner have to go buy all those batteries. Well, this solar company doesn't need any more tax credits. They have plenty. So what they're doing is they're allowing investors like us to buy the batteries, get the deductions and the tax credits instead of the main solar company taking them. So it's a great way to make investments to eliminate your tax bill. And the solar company wins because they got to service all this business and they didn't have to come up with the money to buy all those batteries.
So a couple questions. What are the risks? Number one. And then I'm not sure if you can do this, Ruth. Can you answer the test questions that are numbered 1 through 3 and 13 through 15?
Absolutely. Number one, what has disappeared in today's mortgage market? Refinance business. B, number two, how much income dropped for most loan officers? C, 40 to 60%. Number three, what percentage is the federal investment tax credit? C, 30%. Number four, what is the maximum total solar tax credit benefit mentioned? B, 40%. How many years can the tax credits be carried forward? D, 20 years. Number six is true. Okay, traditional CPAs usually focus more on compliance than strategies. Number seven, solar tax credits reduce taxes dollar for dollar. True. Number eight, the minimum hold period to avoid IRS recapture is 5 years. True. Number nine, clients must participate at least 100 hours per year to meet material participation requirements. True. Number 10, loan officers can earn referral fees by introducing qualified clients to us for these tax strategies. Yes, true. You can get income right along with being a trusted advisor for your clients. Do you want me to go through the short answers, part three?
It's up to you. We
All
also
right.
still have outstanding the question, what
Okay, go ahead.
risks, and then what is at risk if the solar company goes bankrupt or out of business? So what are the risks? And then what is at risk if the solar company goes bankrupt or out of business?
If the solar company goes bankrupt or out of business, you own those batteries. So the person that's leasing from you will be still sending you the money. The only risk is now you're going to have to service those batteries. So we would have to find somebody else to take over, unless you didn't mind going to Missouri to take care of the batteries.
So someone's asking about the test being online. It's read only. Yes, you'll probably have to download the test to your desktop and then make changes there. Also, someone's asking for number 13 and number 15, the answers to
Okay.
13 and 15.
13, on Form 1040, what line shows taxable income? Line 15. Number 14, on 1040, what line shows what you paid? Line 22 for business owners, line 24 for W-2 income earners.
And then 15.
How come I don't see a 15? Was there 15 questions on there? Tell me what the 15th question is, because I don't see it.
Could be a typo. Could be a typo.
I'm like, wait a minute. Let's make one up. What do
The
you want
trick
it to be?
question. Sasha, you got us.
What did I have for lunch today?
Oh, one benefit of joining Camp Silicon Valley.
Oh, that's still
Well,
in there? Okay,
and
sorry,
and
guys.
let's say joining camp in general.
Joy, yeah, I didn't mean, I thought that was taken out because I had done this for Silicon Valley. So joining camp, you guys tell me what, what you feel is the benefit of being a member of camp or joining camp or continuing your membership with camp. That would be great to know.
And Alan, we've got some questions. So there is another area besides chat. If you look, you will see the Q&A area, and there's a couple of questions there as well.
I'm going to stop sharing so I can see the chat. Okay.
So this isn't in chat. This is in Q&A.
Oh,
So
Q&A. Okay.
down on the bottom, you'll see Q&A with other questions
Got it.
being asked there. Do you see it?
Someone's asking for answers to 2, 6, and 10, but that question's a little bit dusty. And it says, when is the test? The test is been posted in the chat. And essentially you can take it now and just submit.
Right. Download it and then submit it to Ruth. She put her email in the chat, but
Mhm.
Alan, we can give it out again.
Yes. I just did. And then also, it looks like people are asking for 2, 6, and 10. We also have a request for 12 and 13,
All
11
right.
and 12. So maybe go through them all one more time, maybe. I
I'm
think
glad
that'd
we
be good.
did this, so I knew we would have time to go through this. Number one, B, refinance business. Number two, C, 40 to 60%. Number three, C, 30%. Number four, B, 40%. Number five, D, 20 years. Number six is true. Number seven is true. Number eight is true. And number nine is true. Number 10 is true. Part three, well, 4 ways to cut your tax bill. It could be any of the four that was on the slide. Timing, shifting, the code, or products. What's the question to ask your clients? Number 12, when was the last time your CPA or your tax professional came to you with an idea to save you money? Okay, that's a simple question. On number 13 is line 15. Number 14 is line 22 for business owners, line 24 for W-2 income earners. Question number 15 is tell me why it's important to you to be a member of camp.
So, and that's some of the things that we can talk about right now to help with this.
Yes.
So, and I'll tell you what, I will turn my camera back on, but know that I am actually at a horse show. So you may see horses going by and all kinds of things. Um, so one of the things that we can even give an example of happening right now as we speak. Well, actually, it's in DC, so it's a little later in the day now, so it's done. But we had 5 camp members this morning going and meeting with senators and congressmen in DC and supporting the mortgage brokers with regard to legislation that we believe is important. It was part of the National Association of Mortgage Brokers Legislative Conference. Last month, here in California, we were in Sacramento talking to senators and assembly people with regard to stuff that we believe is important for the mortgage industry. A couple of the initiatives we have going right now include HOA fees that we are brought to the legislature with regard to what the fees are, the rush fees, all that type of stuff. And we are, in fact, currently working with a senator's office, but just as importantly, working with the DRE along with the HOA management companies trade organization to try to make some changes to Civil Code 4525, which is the civil code that mandates what documentation is provided to a buyer and how long that takes. We also, for brokers, we are in conversation regarding the broker activity report with regard to the DRE and the fact that in many ways it's a duplicate of what we're doing in our NMLS call reports. So those are some examples of some things we're doing right now on the legislative side. We're also doing these education classes with people like Ruth, which is awesome. And just knowing that we're out there trying to support everybody. So there's some great examples of some of the things we're doing and some of the reasons you being involved helps us. Because when you're involved, it helps support us in what we're doing and what we're going out and trying to do to support you.
Yeah, and I want to let you guys know that this is one of the many strategies that we have. People can buy construction equipment using the same type of strategy, but also that you can even buy an airplane. Do you want to buy an airplane or a part of an airplane that gets chartered out that you could get tax savings with? There's oil and gas investments you could do, AI data centers. There's just leverage charitable. There's so many things. I think we could spend a whole weekend talking about tax strategies and explaining how they go. But we don't need to jam all that information into your brains. You just have to know that there's a way to help your clients and there's a way to earn referral fees for getting your clients helped and being their trusted advisor.
Well, Ruth, even as a great example that most people don't realize, I have a lot of people going, oh, horses are expensive hobby. I says, yeah, but according to the big, beautiful bill, they're also 100% write-off now.
Exactly.
It's a win-win.
Can you write off those vet bills for horses? Can you? Okay. I didn't
Yeah,
think
I
about
can.
that part of it.
I hold all of my horses under my corporation, and every penny is a write-off. And at this point, even the 100% write-off of the ownership of a horse right now, it had dropped down, but it's come back up in the big, beautiful bill.
Yep. Awesome.
I just want to answer just one quick question, and then we've also given a guest permission to speak. So I think he has a question for you. But
Okay.
going back to Amy's question, who missed the beginning, does this strategy require setting up a legal entity that simply buys and leases batteries?
Yes, an LLC, a single member LLC is what it takes to do this. We set it up for you. It's not that you have to go do it. You just have to say you want to do the strategy.
All right. And
And
Don, would you like to say
wait a minute.
something? Oh, go
Well,
ahead.
give me 1 second. I just want to make sure to point out to everyone that We aren't telling you to give tax advice, because that's not what we do. What we are telling you to do is that by understanding it, and if you're like me, you look at a lot of tax returns. You have the ability to say, listen, I know there's some savings that may work for you. Might I suggest you talk to a professional about this? And that's where it is important. And that's what we want to make sure you understand.
You're
There you
muted,
go.
Alan.
Don, do you have something that you'd like to share
Oh,
with us?
Al, yeah, thank you, Alan. Um, Actually, I don't know if you can see me on
Can't see you.
okay, oh, that's fine. As the education chair, I just want to first of all, Ruth, you've done a great job. Of course, I already knew that you were going to do a great job. That wasn't the point. What I wanted to let the those that are in the audience know that this level of education that Ruth had just brought to the table, we have got plenty of more of these types of education programs and events that we are going to be implementing. And I would say hold tight, get on the phone, get your friends to join up with you, because we have some absolute uh, top-notch information to be given to you that is going to be uh, absolutely what's the word I'm looking for? Value packed to monetize.
Yeah, I forgot the certification name that we come up with. I thought it was I will have to remember.
Yes, it's MTS.
And it'll be a
Mortgage
designation
tax
versus a certification, but a
mortgage
designation.
tax, yeah, mortgage tax strategist.
Mortgage tax strategist, yeah.
Right. And so
So you'll
we
get a
will be
certificate that you can say you're a mortgage tax
right.
strategist.
We will have a certificate that you can hang in your office, or paste it on your phone wherever uh, you have your office. And we will have a cute little designation that you can use, as far as the font style for each of the different designations. MTS will look a little bit different than those, because one of the next programs that we're going to have is going to be about a professional investment property uh, purchaser.
All right. Anybody else have any questions? You ready to start turning people in? And once they sign up, you earning a check of $2,000?
Are you
Well,
reading the chat, Ruth?
Yeah, so just to recap, the taxpayer earns rental income from the batteries, or is it more accurate to describe it as an interest or dividends? It is income. You're receiving income from your battery business. And somebody asked about they couldn't download the quiz, so just go ahead and put the answers on a separate page, 1 through 14, and put the answers in and send it over.
I think it was 1 through 15.
Oh, yeah, 15. 15. Why is it important to you to be a member of camp?
I actually have a personal question, and yes, Ruth, you did a fantastic job. Um, how many can you get some wrong and still pass the quiz? I mean, how strict are you being?
Yes, you can get some wrong, but if you do, it was just because maybe you got distracted.
yeah, no offense, but at this point, she's gone down through the questions twice and the answers. Even I am sitting at a horse show and just pulled up a Word document and started typing.
That's why I said distracted.
So Ruth, can you just recap what is the main focus of next uh, week's program?
Next week's program is going to be able to tell you, mortgage professionals, how to protect yourself in case of a lawsuit. And I directed it towards mortgage professionals, but this is for you to understand that this is also for your clients. The last thing you want to do, build your wealth. You know, some people may have teenage drivers, and if they get in a car accident, there goes your wealth. Because when you actually reach out to an insurance company for a claim where you're at fault, they typically don't pay the full claim. Okay, so if you end up hurting somebody and they decide you need to take care of them for the rest of their life, you want to have the trust that I'm going to talk about next week. They're very affordable. They give you that protection. It doesn't matter if somebody serves you with a lawsuit, you're going to say, go ahead, because you're not going to be able to get any of my assets. That's what we're going to talk about next week.
Beautiful.
That's awesome, Ruth. Absolutely awesome. I know I have those conversations with my clients when they're buying a first-time investment property. You know, do you have LLCs? Do you have a trust? My
Yep.
trust owns my corporation, and my LLCs are owned by my trust, and all these levels that we can use to protect ourselves.
But people don't realize that their standard revocable living trust that keeps them out of probate doesn't help somebody suing you. It's as if you're an individual. So we're going to help you protect you and your clients. And it's very affordable. And we just want to make sure that the crazy that's in California doesn't hit us.
And we have somebody asking about the slide deck will be available. Not until after, if we're going to do it, it'll be after the second class or after the second course, so
Yeah.
that we're providing both at the end.
Yep.
So
All
again,
right.
Ruth, thank you so much for all you've done. It sounds like we had a lot of great questions, and we'll see you next week.
All right. We'll see you guys next week.